Political power has long been associated with deception and dishonesty. But in the United States of America, where the people generally believe themselves to be informed, there has been perpetrated a fraud of such magnitude that it is without rival in history, and it continues to this day.
Every year in the United States, millions of Americans sign federal income tax returns, swearing under penalty of perjury that they owe federal income taxes. But the vast majority of those who sign such returns have never actually seen the tax laws, but instead have accepted on blind faith the conventional wisdom spread by the tax professionals and government officials, which says that the tax applies to the income of most Americans. That is not true. In time, the truth will become widely known, in spite of the so-called experts, when the people choose to examine the evidence for themselves. You are about to see that evidence. First, we will review the basics of federal law. All federal power originates with the Constitution of the United States of America. The Constitution authorizes Congress to pass laws regarding certain specific issues, such as patents, bankruptcies, and military matters, among others. Congress, through the legislative process, enacts laws relating to these matters, which are then encoded into the statutes of the United States Code. The United States Code is divided into 50 titles, with each title being a separate category of federal law. Title 26 is the federal tax title, often referred to as the Internal Revenue Code. Laws passed by Congress may add new sections, delete old sections, or change the wording of existing sections of the code. Though there have been many such amendments to the tax code over the years, the basic scope of the federal income tax has remained unchanged for many decades. But the statutes are not the end of the story. Congress, being the legislative branch of the federal government, writes the law, but the executive branch enforces the law. So Congress, by way of the statutes, authorizes various executive branch agencies to write regulations which express the agency's official interpretation of the statutes. In the case of income taxes, Congress delegates to the Secretary of the Treasury the power to write the regulations, which are binding on the IRS and, when published in the Federal Register, act as the official notice to the public of what the law requires of them. The wording of a statute and the wording of the regulations related to that statute are sometimes almost identical. However, the regulations are often more specific and give a more detailed explanation of the correct application of the law. All federal power must go through this chain of authority, from the Constitution to the statutes to the regulations. A regulation cannot require someone to do something unless Congress first enacts a statute requiring it. And before that can occur, the Constitution must grant to Congress the power to impose such a requirement. To fully understand the law, one must examine both the statutes and the related regulations. To simplify the process of understanding the federal income tax, we will begin with a hypothetical situation. Andy Green is a United States citizen who lives and works in Ohio. He does various jobs for his neighbors who pay him for his services. Our goal here is not to determine Andy's exact tax liability, but simply to determine if the federal income tax statutes and regulations show Andy Green's income to be taxable at all. While most people simply assume that their income is taxable, we will examine the evidence for ourselves. As stated before, Title 26 of the statutes, often called the Internal Revenue Code, deals with federal taxes. It is divided into several subtitles, which deal with different aspects of federal tax law. The first subtitle, Subtitle A, is where the income tax statutes are found. Subtitle A is divided into several chapters. Chapter 1 is where the basic federal income tax is found. The law will be represented in this graphic format to make the structure and content of the law more understandable. Chapter 1 of the Code is divided into many subchapters, but only a few of these are relevant to determining whether Andy Green's income is taxable. The first subchapter, titled Determination of Tax Liability, seems an obvious place to begin our search. The first part of that subchapter is titled Tax on Individuals, and the first section in that part, Section 1, is titled Tax Imposed. In that section, we quickly find that a tax is imposed on the taxable income of unmarried individuals, such as Andy Green. The section gives a chart for determining how much tax is due based on how much taxable income was received. But this section does not define taxable income. To learn what constitutes taxable income, we must look elsewhere. Subchapter B is entitled Computation of Taxable Income. The first part of Subchapter B looks promising, as it is entitled Definition of Gross Income, Adjusted Gross Income, Taxable Income, etc. And in that part we find Section 63, which is entitled Taxable Income Defined. The text of that section generally defines taxable income to mean gross income minus allowable deductions. So if Andy has gross income, he may be allowed to subtract certain deductions, and what's left over would be taxable income. Rather than just guessing at what gross income means, we want to see exactly how the law defines it. Nearby, we find Section 61, entitled Gross Income Defined. The section is quite short and generally defines gross income to mean all income from whatever source derived, and the first type of income it mentions is compensation for services, which is exactly what Andy receives when he gets paid for doing work for his neighbors. At this point, it seems as though Andy does receive gross income, and therefore taxable income as well. To be thorough, we will examine the regulations related to this section. The regulations give a similar definition, defining gross income to mean all income from whatever source derived, unless excluded by law. Andy wonders if the law somewhere might exclude his income. If Andy were to take the time to look at some of the nearby sections, he would find that certain types of income are specifically excluded from gross income. As one example, Section 101 says that certain life insurance proceeds are not considered gross income for purposes of the income tax. But try as he might, Andy will find nothing in those nearby sections which state that his income is not gross income. Again, Section 1 imposes the tax, and the regulations related to that section reiterate what we have found so far. They state that the tax is on taxable income, which is determined by subtracting allowable deductions from gross income. Further down, those regulations also state that citizens of the U.S., such as Andy Green, are liable for the tax whether the income is from sources within or without the United States. In Andy's case, all his income comes from inside the states. Everything we have seen up to this point seems to indicate that Andy's income is indeed taxable. The sections we have just examined are the same sections used by both IRS employees and tax professionals to determine whether the income of the average American is taxable. If we were to look no further into the law, the case would seem solid that Andy's income is taxable. But we will look further.